Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Yang Jun-sok, professor of economics at the Catholic University of Korea. Dr. Yang, thank you for making time today.
Happy to be here.
So with anticipation for this deal between China and the U.S., the rally on Wall Street continues to the amazement of many. The world is watching the protests in Hong Kong too, though. What's the story in the global markets?
Okay, well, the U.S. market, as you just mentioned, is at or near historically high closing numbers. Asia and Europe last week, they were not as consistent. European markets were generally up but mixed. Asian markets, except for China, was also generally up, but Hong Kong and Shanghai really had a tough time, partially because of the trade war, but probably mostly because of the demonstrations in Hong Kong. And well, a bit of a good news, I guess. Today, Hong Kong and Shanghai indices actually recovered a little bit, but still, the performance overall, I think, has been worrying. Now, why is U.S. market particularly up versus the other markets? I think we could look at some reasons. First of all, the New York market, the American market, seems to be unusually dependent on U.S.-China trade war news. I may go as far as saying that they may be irrationally exuberant. Right now, the news from the negotiating front seems to be mixed, but as long as there's no explicitly bad news, the market seems to be heading up. So they seem to be taking the good news with much more weight than bad news. And then the second reason is that, well, U.S., along with most of the other countries, do have an extraordinarily low level of interest rate right now. And in a sense, money doesn't really have anywhere else to go other than the stock market because the returns from elsewhere are so low. And then for the United States in particular, their underlying economic statistics are not that bad. In Europe, in Asia, there's a lot of worrying statistics, but in the United States, with the possible exception of manufacturing numbers, the employment numbers, the growth numbers, the consumption numbers, they all seem to be very fine. A lot of people were worried about possible recession next year. The worries about that seems to be declining, so that may account for why the U.S. market in particular is doing so well.
Very interesting. And another figure, according to the Institute of International Finance, the world's total debt by the end of this year could top 255 trillion dollars, which would be an all-time high. Who's taking on all this debt, and what kind of risk does it pose to the world economy?
Okay, well, getting somewhat deeper into those numbers, $71 trillion of that number, 255 trillion, comes from emerging countries. That might sound like a low share, but the emerging countries do have a lower market share than the advanced countries. So 71 trillion is actually a very high number in comparison to the size of their market. Also, in the last 10 years, there has been a growth of 70 trillion U.S. dollars to the total debt. The reason that this number is important is because last 10 years we've been suffering from the global financial crisis and its results from the global financial crisis. And then if you just look at the last year, half of the increase in debt came from China and the United States, which is worrying because, well, they're basically the two largest economies, and in the past, they've been acting as engines of growth. Now, the reason that we're very worried about the debt is that the more debt the corporations and households and governments pile up, there is a higher possibility of financial crisis, which is why some financial people are very concerned right now that the economy is not doing well and we have a high level of debt. And this is also shown in Korea. We have a very high household debt. We're not as badly off with corporate debt because after the 97 Asian financial crisis, we've been keeping a very close eye on corporate debt, but still, Korea also has a higher debt level than a lot of people would like. And then this has been last 10 years, the interest rate has been unprecedentedly low as an aftermath of the global financial crisis. Right now, it seems like comparing this to the Great Depression, we've learned how to minimize the effect the negative effect of the shock, but we haven't really learned how to shorten the length of the shock. So this aftermath of the global financial crisis and the resulting low interest rate has been going on for more than 10 years now, but the higher level of debt is a natural outgrowth of that, and that is keeping the global economy somewhat vulnerable to further financial crisis.
Right, and I'll just point out for our viewers on the screen, it said $255 billion, but that's $255 trillion with a T. Now, Dr. Yang, this week, Statistics Korea will be releasing the results of a household survey that should shed some light on the income gap in the country, also a survey of industrial activity. Tell us about those briefly and what we might expect to see.
Okay, well, household income, I expect the income disparity to increase a little bit. And the reason is that we've been having a very slowdown in the economy. Whenever there's a slowdown in the economy, well, people who have union jobs, people who have skilled labor, they tend to do okay. Their income may fall, but not by much, and in a lot of times they even increase. Whereas the unskilled labor who form the lowest income bracket, they usually lose jobs or their pay becomes even lower, so the income disparity usually increases during the period of a recession or an economic slowdown. We've seen this in the first 2 quarters of this year. In the first quarter, the income disparity rose. In the second quarter, the income disparity also rose, but the income for the lowest 20% of the population, they held steady. I'm not sure if they'll be holding steady this time for the third quarter. That's why I'm partially expecting the disparity to increase. And then the industrial numbers, well, our exports have not been doing very well, so I expect those numbers to be worse in the third quarter. And then there's also household debt, household credit numbers coming up, which is crucial because, well, household debt has been acting as sort of a burden for Korean economy. That's one of the reasons why a lot of people think that Korean economy is not recovering, even though government is putting in a very large fiscal policy and the interest rate is so low. But I also expect the household debt to increase somewhat. It's an inevitable result of the low interest rate plus the economic slowdown.
All right, Dr. Yang, we'll be looking forward to those numbers, and thank you for coming on today. A pleasure as always.
Thank you.